Alright guys, welcome to another breakdown for GU, which I actually finally started looking back into this week, just because it's starting to get interesting. So for the most part, right, I've been away from this pair, basically since we started dropping. Right, mainly since we broke, the final leg up, which is here. I've just been very, hesitant to want to pursue any trade in here, because obviously there's plenty of intraday trades that you could definitely take here. Like, look at this. This is a 300 pip range. You can easily get a very solid amount of intraday moves, right? But I'm not interested in this. I'm interested in what this can become, right? Because keep in mind, from a grand scheme of things, we have a very clear target up here. Right, why? Because if we're looking at overall structure, right, our final leg broke months ago, right? So what does this show us? It shows us a bias, right? And if you can't necessarily find a trade idea, right, the main reason, in my opinion, could be that your direction is wrong, or you don't know where direction will take you. So we know where our direction is, we know where our target is. Now we just need essentially the time frames, the structural levels below the one we are currently in, to start fitting that narrative, so we can then aim to take out target X, which is here. So it gets pretty interesting, because let's zoom in here. Like, for example, right, I've pretty much, like we said, I've been away from here, and as you can see in the zooms, I haven't really been paying too much attention to it, mainly because it's not something that is attractive to me. I'm not trying to sell this, but at the same time, bearish order flow is in play, so I don't really want to go against my bias, because that can confuse me, and it can cause me to make some very simple mistakes. So yeah, I'd rather just stay away, right? I'd rather miss a trade than lose a trade, per se. So interesting here, right? Notice once we finally started reversing, right, took out a lot of supply to start bringing this lower. Therefore, it took a lot of effort to want to bring price lower, right? So naturally, off the bat, you're going to see a strong diminishment. Why? Because this move is counter trend. It already took a lot of effort to begin the move, right? So now it's just a matter of trying to see and measure where we can try to capitalize in the opposite direction, which would then be pro trend. So as you can see, we have a large spike in volume right after the diminishment, after the high effort volume here. So keep in mind, this high volume bar is with a pretty much a very indecisive candle. So what does this mean? High volume, low movement, right? Technically instability. So as we start zooming in, I'm already starting to see signs of reversal. So as we start coming into these time frames, right, I'm seeing where my major intraday, my swing legs are. So swing leg, right? High, low, right? We pretty much had the preliminary level of structure. This is now solidified low. Had a pullback, right? Then disrupted, came lower, right? But was unable to clear previous low. So this came back higher. So this is now my pullback still of this entire leg. So we have a high-low retracement after the retracement, right? Which is when we finally saw the bearish move. Keep in mind, there's a lot of intraday plays you can play there, right? But I'm not focused on that, okay? So, right, immediately after we started, to essentially continue structure to the downside, right? Because we have a high, low, and a retracement, naturally this is our target, correct? We have our target there. So I'm trying to see if we create a substantial new low, or if we start reacting off the bat. So as you can see, when you're measuring a structure break, right, low, high, this is a substantial new high compared to here, even though we didn't essentially continue afterwards. This is what I want to see when I'm seeing a structure break. Whereas we're going to discuss here is more so a liquidity grab. Let's actually get to why that is. So, right, keep in mind, right, as we're coming lower, right, we see a spike in volume, right, but then it starts slowly diminishing and diminishing, right? So as you can see, high, low, pre-move retracement, low, retracement, low, retracement, low. But this is key here, right? Not because of what the candle is, about what the candle is doing. So as you can see, our target red was initially met here, right? But that is a break of structure because we have not taken out the preliminary level of structure here. So as you can see, we have a low, our retracement. Retracement did not take out a high, so bearish structure is still in play. So now, right, the important thing to measure here is the fact that we took liquidity and then took out a level of structure. So this signifies bullish intent, bullish sentiment, bullish reversal, right? And keep in mind, we're pro-trend bullish. So we now have a potential liquidity grab here, and we also have a potential liquidity grab here. So that's massive because this is a very significant low. This is a very significant low. So this is massive, right? Because this is how, if you start to catch these reversals here, this is how you catch those 200 pip swings, those 400, 500 pip swings, right? Because you wait for bearish sentiment in an overall bullish trend, and then you wait for those major intraday, those minor intraday reversals to come into play, so that then you can catch, you know, those high RR trades, right? Those unreal trades, in my opinion. So as you can see, as we are giving essentially a liquidity grab, right? Because we took liquidity, took out this preliminary level of structure, this final leg here that took out structure, right? And keep in mind, even though we didn't, you know, reach here, right? If price were to have reached, let's say, this wick, bearish order flow is in play, but the structure break outweighs the mitigation, in my opinion, in this scenario, because we're taking out very crucial levels of structure. And if we're looking at closures, right, extremely deep closure, I mean extremely strong closures, I'm sorry. So excuse my dogs if you can hear them. Anyways, as you can see, right, as we come here, we're reading momentum, we see strong momentum, then we see weak momentum. Okay, so right, in terms of scenario here, this is actually a news catalyst, I believe, where we came back into essentially a inefficient pricing inside of the discount. So that happened, right, and it created a new leg. What does that signify? A new structural range. New structural range in play, right? There's obviously going to be volume down here. There's going to be orders down here because of how essentially how significant this push was to the downside and then created upside move, right? But I cannot assume these discounts if order flow is still in play to the upside. Hence why I took my position here on Tuesday. Was it Tuesday? Yeah, I think it was Tuesday. Or Wednesday, I'm sorry, Wednesday. Anyways, right, if we're looking at structure inside of here now, keep in mind we already have a bias. Our bias is up. Okay, so what's significant here to note, okay, the reason why this low here to me is extremely significant is because this is the last time that we saw, you know, these preliminary structure breaks. I'm sorry, let me take this off. These preliminary structure breaks here, which then led to an upside move, which to me signifies one leg here, right? Notice right after here, you can see push up, push down, push up, push down, push up, push down, push up, push down, push up. There is nothing in there that's breaking, right? Whereas here, you can see push up, and then we break structure. This could have been technically a reversal here. I'm sorry for those ugly markups here, right? But keep in mind here, right, this could have been a point of reversal. Why? Because this gave momentum to the downside. You can see the structure break there, right? Well, that would be considered continuation BOS, right? But immediately, right after you broke down here, you then made a new higher high, you then made a new lower low, which could still incite buyers, right? But I mean sellers, I'm sorry. But right, as you can see, momentum automatically came in after that. That is showing its hand, and then that was the continuation that went higher. So this is the low that created essentially the final move that took out liquidity here. But keep in mind, this is probably a premature leg. This from here would be the full leg, in my opinion. Okay, and we're gonna come back to that. But anyways, right, if we're looking for, oops, sorry. If we're looking for points of interest, okay, we see the final unmitigated candle there, with your point of validation being obviously the black line, right? Or it could even be this point of validation here, right? But keep in mind, I don't like playing based off of reactions. I mean, not off reactions, I'm sorry, that came out really wrong. I mean, I don't like playing just based off of POIs. I like to wait for my reaction and then go from there. So, all right, keep in mind, New York Open is right here. So this is when I start trading. Right here. Okay, so, right, overnight, right, or while I'm sleeping, barely waking up, right, we see price come in, right, react from the point of interest, right, and then give a liquidity, not a liquidity grab. Oh yeah, it would be considered a liquidity grab because it eventually came lower, but I cannot assume that without that happening, right? So this is actually a continuation BOS, right, because it's a preliminary level of structure to break when you still have a bearish leg, right? So I'm seeing bearish leg, continuation BOS, retracement, right? And then we have all the way structure come down here. But we never reached the invalidation point, right? So after this leg, right, we came back, we retraced another continuation BOS. Could be a liquidity grab, I wouldn't know at the time, right? And now this is where it's getting, very interesting, because we now have the retracement of high low retracement, right? Because we took out a preliminary level of structure, so this is now a solidified low. So after the retracement, right, we came in, we gave unwillingness, structure break. This is a disruption of bearish structure to me, right? And because we're currently here, right, what is this looking like to you? Right, this is looking to me like a schematic, right? We don't have the selling climax, right, which isn't, the end of the world, but it's what I would like to see. And that's the only way that I start to catch on to schematics, before they occur, right? It's not until after phase C, phase D that I can actually start judging if it's actually a schematic, right? Because we need those sentiment changes, we need that volume confluence, right? And even though we don't have the selling climax, right, we do have our final leg down, which is on diminishment, and we have very, very low volume here, right? Very impulsive move, so high momentum, low volume, instability. So as you can see now, we had the pullback, unwillingness, right? So now it's just a matter of wanting to find an entry. Right, so in terms of realistically playing, if you're trying to play every potential POI there is, right, your first loss would have came potentially from trying to play this wick, right? Only if you're not referencing your point of invalidation, right? Because we created the disruption of structure here. This is now the full leg here, meaning my full invalidation point is now this low, right? Let me make this red. Right, so if you're using, this POI, and if you're using the point of invalidation concept, then you're fine. But if you're being extremely aggressive and you're wanting that 1.5 pip stop. That's fine. No worry about it. That's fine. But as you can see, right, that automatically pushed through. What does that signify? This signifies bearish or bullish disruption, right? Because naturally, if order flow is just to continue, it was going to continue here. So we now have to wait for that disruption to now disrupt in the other direction, right? So as you can see, we then come back into this inefficiency. Come back into this inefficiency, create a new low here, right? But this is now a liquidity grab. Point of invalidation is still in play. Point of invalidation is still in play. Let me take these lines out for clarity. Excuse me. So immediately after here, we have a liquidity grab that leads to a scalp structure break here, right? So this is now a bearish disruption, right? And so now pretty much our bullish move is now essentially a scalp structural range here, right? So where is my final unmitigated point here? Bingo, right? So keep in mind now, if you're playing this scenario, my point of validation is now moved from here to here. Why? Because if we have this, essentially this liquidity grab in play, right? If we break this low, then this is now collateral liquidity, right? Why? Because we've already changed bearish sentiment. The bearish sentiment did not take out liquidity, held structure, and then gave you a bullish liquidity grab, right? So naturally, if this liquidity grab is valid, it's not going to take out the low of the liquidity grab. It doesn't make sense. So inevitably, this is where my stop would be. And this is about a 4 pip, I believe. Yeah, 4 pip stop. And from this 4 pip stop, our immediate target from an intraday basis is the previous high, right? So what happened immediately after the move, right? Immediately after the move, right, we see essentially unwillingness, right? But there is always a chance that this unwillingness can be like that, right? So because I consider that, I'm waiting to see if we're going to mitigate anything from the bottom. So as you can see, we came back, gave one move. Essentially the solidified low here was based on, I believe, in H4, H2. No, it's not H2. Okay, yeah, 30-minute inefficiency fill. As you can see, 30-minute inefficiency fill cleared high, cleared preliminary levels of structure. So this is now essentially low, high retracement, right? So low, high retracement leads to a new structural high, but right, we do take out liquidity. We meet the target of the initial schematic, but this immediately reacts down, breaks structure, and is now considered a liquidity grab. So at this point, right, because there's so much going on here, this is now referred to me as no man's land in terms of major intraday and beyond, right? I'm positive you can play order flow inside here from a scalp perspective and from a minor intraday perspective, right? But I'm not too interested in those moves. They'll provide you good moves, right? They're good moves, don't get me wrong, but that's just not what I'm looking for. You know, I'm looking for that bigger play because what are we referencing? We're referencing our daily time frame, and we even zoomed out all the way on our daily time frame. We're still playing in that schematic that we've talked about for the past couple months. So, right, as you can see, we're now stuck in no man's land. So, because we're now stuck in no man's land, we have a liquidity grab. Then naturally, I'm going to zoom out, right? When in doubt, zoom out, okay? So if we're looking at premium discount, right, I was playing inside of the premium the entire time because I was focusing on order flow continuation, right? Order flow continuation, that was a bad drawing. Let me do this instead, right? As you can see, I was trying to continue order flow. Hopefully you guys get the picture. Anyways, right, I'm trying to continue order flow. I cannot assume my discount until we see any type of leg be taken out, right? And I can't assume these legs are being taken out because we already showed our hand to the high side, to the upside. So I can only assume continuation, right? So I cannot assume these structure breaks until they happen, right? So I've already acknowledged that I'm in no man's land, right? So I'm now going to take a step back, right? And so now I'm not focused on anything inside of that box. So I'm now looking left to see if I can find any type of points of interest. Right, so there is essentially, I see an indecision here. Indecision there, wicks there, there's maybe something there. Okay, so that's clue number one. Right, now as I go higher, right, there is a turbulence point here. There's interruption, then continuation. Right, then all I see is order flow, order flow, order flow, order flow, more order flow, disruption kind of, and then continuation of order flow. So I'm more so interested here and here. I'm not interested in these potential POIs. Why? Because there is still a POI below it. And this one, there's still a POI below it, based on this minor or this scalp time frame, maybe even minor intraday time frame. As you can see, turbulence point, and then there's something inside here. So, right, I don't like to look for POIs inside of M1 before I do this. Why? Because I'm looking for interruptions. Why? Because that's where money is going to be. So, what do we see here? Right, this does not meet the rules of an SC because you can see there's a push down, and there's essentially a pause, and then there's another pause, and then it gives a move. So this is not strong. Could be strong order flow on a smaller time frame, but it's not an interesting POI to me. So I'm more so maybe looking here, maybe looking here. So let's keep looking through our time frames. Okay, so there is evidently a liquidity grab there. Oh, not liquidity grab, I'm sorry, an SC there. Right, because it's potentially mitigating here, or potentially even gave a liquidity grab and then mitigation, then push up. So that's POI number one, right? Where my invalidation point for that would be down here. Okay, next I'm going to start zooming in here. Okay, cool. So now we see horizontal range before they move to the upside. There could be a POI here, but keep in mind there's still POIs potentially down here. So I'm more so looking for the lowest of the two, right? And yes, you could say there's inefficiency here, there's SC here, but where are these being derived from? If these aren't being derived from anything above M1, it's not necessarily something I care about. Okay, so right, as you can see, as we go diving into the time frames, right, I see an SC here. There. Okay. So right after this, right, we have our wick here. Right, so this is now a potential point of interest, but my invalidation point is down here. Why? Because let's look at smaller time frames. There's still the 50% here. And if we look smaller, right, there's still potentially an SC there, 50%. And you can see there's even still an SC there. So it's just like, I want to be safe, you know? And it's still, keep in mind, this is a 3-pip range. You know what I'm saying? Like, that's still a very, very, you know, decently big range. Oh, not a decently small range, I'm sorry. So, as we come higher, or as we come into the points of interest, I'm looking at reactions. Right, so, sorry about this, guys, I'm moving something. So as we're looking at reactions, right, I'm looking at reactions here. Okay, so we have bearish order flow, obviously in play. Okay, so keep in mind, we wanted to react here, as you can see, but it it pretty much would have given a liquidity gap, broke through the immediate POI off the bat, so it's automatically invalid. Next, we come into POI number 2. You could have taken both of these trades. If that's what you want to do, by all means. But if you don't, right, find, you see a new structural range intact. Okay, post reaction. So now let's dive in here. Okay, what do I see? I see turbulence point there, and I see turbulence point here. Okay, so it would either come all the way down here, or we would play inside of this here. So coming back to M1, right, there's obviously a push down, and then this created the final leg. So naturally, if you're wanting to continue order flow, obviously we don't want to take out this, because then that invalidates, and you'd have to wait for a bullish disruption, break of structure, anything like that to then give you an opportunity to the upside, just like it was with the scenario I just showed you initially. So I'm focused here first, and then I'll be focused here in case this doesn't hold. So as you can see in the inside of that candle, 30 seconds, very clear inefficiency here, right? And as you can see, we have the reaction, new structural range. New structural range intact. As you can see, M3, there's inefficiency between wicks. Right, just eyeballing it right around 50%. And if you wanted to play that, let's see how. Okay, off the bat, I see bearish order flow, lower highs, lower highs, lower highs, lower highs. Right, then we see one push down. Right, didn't necessarily mitigate anything, but gave a strong reaction to this, which is the final rule of NSC. So this is your point of interest, right here, and then we tapped again here. So let's see if there's anything on smaller time frame. Okay, yeah, there is. Right, as you can see, this initial push mitigated, the M1SC, but it did not reach inefficiency, which is what it did here. Right, so conservative, very conservative, right? If we're wanting to play this, 2.5 pip stop, and if it was the 30-second, that's a 1.5 pip stop. So as you can see, the point of validation here actually meets, a decently sized sell. It's nothing huge, but you're still using a point of invalidation because of the clues that are, shown. So we cannot take out this structure point, right? It wouldn't make sense, or else that disrupts bullish order flow, and then technically the whole entire scenario could go to shit. Okay, so let's say you took it in the conservative way, 2.5 pip stop. Your targets are previous liquidity, previous structural highs. Right, target 1. Already 8 to 1, 22 pips. Target 2 is back up here. Back to liquidity grab, 62 pips, 25 to 1. Right, and keep in mind, now that we've taken this out, this is now a solidified low because we've taken out the structure point of low, high retracement, which is showing to us, right, that if we now take out, obviously, these highs here, this is now considered the final leg, if you want to consider that the final leg, the final full leg, I'm sorry, to now be taken out, which disrupts the overall bearish flow, which can now solidify this as a low, and we can now start looking to aim for targets, right? So it all has to pretty much come together, right? Just because some structural levels are bearish does not mean you cannot be bullish, even though your entire vision is bullish, right? You just need certain confirmations to then, go about your business. All right, so I hope this breakdown helped. Sorry about that. And yeah, I'll see you guys in the next one.